And it's my contention that in the investment management industry today, that the game is changing, and that if we look at it a little bit closer, we need to figure out what is the game that we're playing. Let me explain. The author of Start With Why, Simon Sinek, highlights the importance of knowing the game that we're playing. At its most simple, this concept of knowing the game that we're playing, we need to have the right equipment and the right strategy. So, in life, on the weekend, when you're going to a tennis match, you need to take your tennis racket, not the golf clubs, right? And then asset management, we need to know what is driving our investment returns. So that's why we pay attention to things like, interest rates, inflation, value, growth, economic growth. These tend to be the big drivers of return, and we look at the correlation between these factors and our returns. But are we playing the right game? Are those the most important drivers of return? So thinking about this question a little bit differently, do we have the right measuring stick in how we measure our returns? And if I ask you what your returns were over the last year, people often, shoot out some percentage return, 5%, 10%, negative 10%, whatever it might be. And all those answers assume that we are measuring the returns in currency, generally, US dollars. But are US dollars the right measuring stick? I mean, they're probably the best measuring stick that we have. But with all of the monetary volatility that we see in the world today, is that the right measuring stick to assess our returns in? So a key component to my investment thesis is that a monetary regime change is a high probability event, and that measuring stick on which we base all investment decision making is actually changing below our feet. Let me give you 3 reasons why I hold this view. So one, just the historical precedent. The world has been through numerous different monetary regimes over many hundreds of years, but even in the last 100 years, we've seen 3 different monetary regimes. Pre-World War II, we had a gold standard. Post-World War II, we had a pseudo-gold standard. And post-1972, 1973, we've had this dollar reserve standard. So just there from history, we can see that the monetary regime changes. When you're in a regime, it might seem like it's never going to change because we're in such a dollar-centric world. But there is historical precedence that these regimes change. And we've already been in this regime for 50 years. And that provides clear evidence that at some point in the future, it wouldn't be surprising if it changed again. The second reason is that we already are at monetary and fiscal extremes in the 2020s. This is quite obvious if you look at global interest rates that are at record lows, or if you look at global debt levels, which are record highs. Global debt levels surpassed 300 trillion in 2021, rising by approximately 30% in both 2020 and 2021. So we're at extreme levels. And once again, I think that adds a bit of evidence to the pot here that the monetary regime could be changing at some point in the future. And then the third component is that if you think about it, the monetary regime change might already be underway. Because if you look at monetary policy today, it's unrecognizable to what it looked like 20 years ago. The Fed and other big central banks like the ECB and the BOE and the BOJ, these central banks are using increasingly unorthodox policies. In 2008, quantitative easing became extensively used as a monetary policy tool, and now the Federal Reserve is using reverse repo operations extensively. What are they going to come up with next? So it's clear to me that actually below the surface, the monetary regime is already changing. So if the game is changing, what are the implications? So a few questions that I'd like to leave with you, and it's five here points to think about. The numeraire through which we use to conduct all analysis in financial markets might actually be a faulty measuring stick. It's like a ruler that has waves in it. Like, it's going to work, you're going to get an approximately accurate number, but it's not going to be precisely accurate. And listen, dollars are probably still the best tool that we have at our disposal, but what are we missing? What are the consequences if that measuring stick is becoming faulty? Risk managers might be focusing on some of the wrong characteristics. These risk managers hold a very important role in many asset managers today, understandably. But what happens over time is they try and fine tune their approach and create increasingly tight constraints for asset managers, which seems like it's a good idea. But what if all of their assumptions are faulty because of this faulty measuring stick? That could pose a number of deep challenges for the asset management industry, and it's something I think people need to think about very closely. Third, decentralized digital counterparty-free assets with final settlement in minutes. That is a profound innovation. And I think that crypto and Bitcoin have a role to play in this monetary regime change. And they, as an investment, they are a interesting and effective way to mitigate against some of these monetary regime change risks that are on the horizon, or perhaps actually already taking place. Asset managers who just view Bitcoin and crypto as a high beta NASDAQ play, they're really missing the point. There's a lot more going on below the surface, and I encourage you to watch the video that I've linked to up above, which goes into this correlation between crypto and equity markets in a little bit more detail. But the brief answer here is just having a correlation between two assets does not mean that those two assets are the same fundamentally. There's a lot more going on below the surface. Even within the crypto markets themselves, you can see a lot of investors getting very excited about numerous other use cases of crypto, which is effectively taking Bitcoin's innovation of digital scarcity and applying it in other realms. And that's great and that's exciting. But I think there's also a risk that people get overly focused on those use cases and forget the game that we're playing here. Because I think the bigger game is that money, the monetary system is changing, and assets will be vying and competing against each other for the role either as the most premium and the global reserve asset, or just other alternatives that are competing against each other. It's possible that we move into a multipolar world with numerous reserve assets competing against each other. And while I'm pretty confident in my outlook that the monetary regime is changing and that crypto and Bitcoin have a role to play in it, I'm not foolhardy or foolish enough to think that I know exactly what the future looks like. So send your critiques and comments and questions and post them down below. I encourage you to bring your own perspective to this debate. Thanks for your time, thanks for watching, and I'll see you in the next video.